You don't have to look very hard to find some voices on YouTube still calling for a housing crash just around the corner. But despite the pessimism, we find the housing market hitting new record high prices on a regular basis. Don't get me wrong, there are some warning signs out there, but a crash is nowhere on the immediate horizon. In today's video, we're going to look at the latest housing market data, what those warning signs are showing, and what to expect for the housing market in the months ahead. Let's get into it. Welcome to Real Estate Watch, the channel that focuses on forward-looking real estate analysis for the U.S. and regional markets. If you're new to the channel, my name is Eric and I am a professional economist in addition to being a licensed real estate agent, so I can bring you a unique perspective that you'll be hard-pressed to find on other YouTube channels. Let's not waste any more time. Get right into it. According to the latest data from Redfin, a national real estate brokerage, the median home price in the U.S. came in at $428,000 in July on a seasonally adjusted basis, which was a 4.1% increase from the same time last year. A housing market crash? No way. A few years ago, I myself thought we could face a housing crash because of the rapid rise in home prices and mortgage rates, which deteriorated affordability. The idea being that if demand goes down, prices would have to go down in response. The reason it didn't, supply went down as well. I laid it out in my Mea Culpa video a while back if you want to check that out in greater detail. Basic economics tells us that if both supply and demand go down, you're not going to have much change in the market clearing price. Supply is still down. While we did get an uptick in July, transaction levels are still way down from the historical trend, which maintains upward pressure on prices. So while there is no housing market crash on the immediate horizon, there are some warning signs, as I mentioned before. The biggest one is the percentage of active listings with price drops. As of July, it was at 19.4%, the highest it's ever been in Redfin's data going back to January 2012. This makes sense to me given where affordability is right now. The average housing payment as a percent of the median household income was 39.9% in July, well above the 30% level where the government says a household is cost burdened and above the peak in the last housing bubble. This is why demand is so weak right now. It's just so hard for the average household to afford buying a home. In this kind of market environment, it's no surprise that some sellers are having to drop the list price to entice offers from buyers. What is a surprise to me is that the median home price keeps going up while we're seeing the percent of active listings with price drops also going up. The two trends don't really make sense with each other. But we do need to remember that all real estate is local and the national level housing statistics are an aggregation of all the regional markets. For my next regional market video, I'm going to dig deeper into this and try to make sense of the two trends. We know that buyers are facing big affordability challenges, and we know that a record high percent of listings are having to drop their prices. What I'm going to try to find out for this future video is how serious of an issue this is and whether there are some underlying regional trends to suggest it could mean a correction for the housing market down the road. Make sure you're subscribed and hit that notification bell if you want to make sure you don't miss that video when it comes out. For now, let's take a look at where the market is headed over the next few months. One of the biggest determinants is what happens with mortgage rates and how that will impact supply and demand in the market. In my latest Mortgage Outlook video, I laid out the case for a September rate cut by the Federal Reserve and what to look for over the next month that could trigger mortgage rates to head below 6%. Check out that video if you want a deeper dive on the subject. Whatever the magnitude of mortgage rates coming down, they're going to come down, and they have been already. The average 30-year fixed-rate mortgage was 6.35% as of August 29th, the lowest it's been in more than a year. Most of the recent decline has been in anticipation of the September Fed rate cut as the bond markets have sent the yield on the 10-year Treasury lower. While that September rate cut is mostly priced in by the bond market at this point, if we see additional signals from the Fed that more rate cuts are on the way, we can expect bond yields and mortgage rates to head even lower. We've already seen in the beginning of the year how supply and demand responded to mortgage rates when they were lower in the first half of 2024. On the demand side, we saw sales increase after buyers responded to the lower rates, and on the supply side, we saw an uptick in new listings over the same time frame. And this is what we can expect in the months ahead as rates come down further. Demand will likely increase as well as supply. Going back to basic economics, if you get an increase in both demand and supply, there isn't going to be much change in price. If demand alone increased, you would expect there to be upward pressure on prices. If supply alone increased, you would expect there to be downward pressure on prices. But when you have a shift in both the supply and demand curves, prices stay relatively the same. What that means is that we are likely to see a continued slow uptick in home prices each month on a seasonally adjusted basis. The latest year-over-year change in the U.S. median home price was 4.1%. That's actually a bit lower than the historical trend. The default direction of home prices is up, so if there are no big changes to supply and demand, or if the changes in one cancels out the other to a certain extent, prices are likely to continue increasing at historically average growth rates. The only thing that I see right now that could trigger a big change down the road would be if we enter an economic recession. That is also something I'm tracking on a regular basis. In my latest video on that subject, I pointed out that there is no recession in sight on the immediate horizon either. Yes, we're seeing some slowing in the job market, but economic growth continues. So that's the big picture right now. No imminent housing crash or recession in the months ahead, and a gradual uptick in real estate activity as mortgage rates come down. What do you think? Is my analysis way off and there are some big changes coming in the months ahead? What's happening in your local housing market? Are you seeing what we're seeing at the national level, with average home prices going up, but the percent of active listings with price drops also going up? Let me know in the comment section below. If you want to stay up to date on all the developments for the housing market and economy each month, make sure you are subscribed to this channel and hit that notification bell down below so you won't miss my next video as they come out. And if you could do me a favor, please hit that like button on your way out to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.